Hi, Tori Agler with McIlvaney Precious Metals with your November 2024 update. The streak is over. So we had 9 straight months of a higher close with gold. We couldn't make it 10. Gold ended up closing down about 3%. And so unfortunately, that streak is over. And a lot of that had to do with just the Trump rally. The white metals followed suit as well, and we'll get into some of that. I'll save the charts for the end. And what I mean by the Trump rally is, quite honestly, just this post-election exuberance and optimism in all markets. So we've seen the equities markets rally, we've seen the U.S. dollar rally, the bond market, and certainly cryptocurrencies. And so when those things are all running, especially the U.S. dollar, it is very normal for for the gold price, I'm sorry, to pull back a little bit. And so that is the case. Gold ended up coming down about 10%, just shy of 10% from its all-time high. And unfortunately for the month of November, again, down about 3%. All that being said, we're still optimistic for the long term. So as we get into this season, though, we do see seasonal weakness. And I'm going to get into that a little bit as well. But with 2025, the picture's not a whole lot better, in my opinion. We've been in a recession. It hasn't technically been defined as a recession. They've changed the definition. Really, we've been in a stagflation, so a stagnant economy that has inflation on top of a recession, or a stagnant economy, that's the stagflation. And so with that, I do believe that that's going to continue. I do believe that President-elect Trump is going to have his hands full on trying to stimulate without driving inflation too high. Inflation is here to stay for a while. He also is going to try to tighten the belt without driving us deeper into a recession or a depression. So that's a tightrope. I'm glad it's not my responsibility to walk, and we'll see how everything plays out. The U.S. dollar, I do think, is kind of top heavy here and due for a rollover. And gold did bottom. It has come back a little bit. And so we're going to get into some of the charts. And again, as we look at seasonal opportunities, don't get discouraged here. The election cycle in 2016 had gold off 13.5% after Trump won. And so we ended up being about 4% shy of that, if this is the low that we've seen. And then also December tends to be a weak month for gold. A lot of profit taking, a lot of hedge fund profit taking, money managers that lock in those gains. They'll sell those assets, lock in their asset under management fee, and go from there. So all that being said, let's get into the charts now, and I'll show you here a little bit of what I'm talking about. This is the gold chart, okay? And with that, it's nice to see that we had this, very strong level just under 2,800 prior to the election. But here you see that post-election decline, okay? And that represents a little more than, obviously, the November 3% decline, because from the open of the month to the close of the month, we closed around 2,638. You could even argue 2,660, depending on the day. And then, we'll see where the support levels are, which is going to be important, because what we want to see is where those support levels are for you buying dips, okay? The dip buying is important because, as I move this out of the way here, when we see that high hit, and then we can put in these Fibonacci retracement levels, we did come down to just under 2,550, 2,540, okay, from that all-time high. And that's what I was talking about, being about 9.5%. Not all of it election. Some of it started right beforehand on the expectation of the win. But some of those pullbacks become resistance levels to the upside. So we've got a floor now called a support, and those are the green lines. The resistance are the red lines. And those resistance points now are kind of right where we're sitting today at around 2,640. Okay, and you'll see those are going to serve as areas that we bump our head up against. What I'm talking about buying dips, I'm talking about as we get into these lower levels, 2,529 again, 2,483. Okay, and you could see it come all the way down to 2,287, back to where we were in the spring. And that does not mean the bull market is over. It just means the U.S. dollar rally has continued. and there's a little bit of a pause or a breather. Silver chart for November. Again, you'll see that here. It's down 6.2%. We closed at 30.74, which isn't reflected here. This is today's price action, but closing 30.74 on the month. And again, down. Now, where are those support and resistance levels? So as we've pulled back here, most of these are going to be resistance levels as we try to climb back up. But look at this double dip right around to 29.72. That's a really firm line going back a long ways. And hopefully that holds. Every time we've hit that $29.72 mark, we've had a little bit of a rally, but the rallies are getting a little more shallow. So we're hitting higher or lower highs. And unfortunately, that doesn't necessarily bode well for a reversal quite yet. But again, buying those dips, and we'll get into the gold silver ratio a little bit as well, because it's actually climbed. Now we've got the platinum chart. Doesn't look a whole lot better. It ended up going down 4.4% in November, closed at $957.10 after closing just at $1,000 in October. The palladium chart similarly. This is actually the inverse of its October chart. In October, palladium was up almost 12%. In November, palladium's down almost 12%. So 11.7%. We closed at $999.87, as you'll see by this little spike right before the close of the month last Friday, as I record this on Monday, December 2nd. All right, I talked about the US dollar rally. Lo and behold, look at this post-election exuberance. Dollar takes off as the Trump win becomes ensured. And we rally all the way to a 2-year high of 108. Again, this is the opposite of the gold chart, and that's very, very common. And so, I think that it got a little top heavy, and that we'll see it retrace. We're going to give all of that back at some point here in the next 6 months, and we'll be resuming our climb in gold. I'm not worried about it in the long term a bit because of the underlying fundamentals still being so tough. Not the least of which is, obviously the dollar, but needing to rally or to turn over, but also geopolitically. If we don't get some pacification and we continue to get a ramp up in tensions globally, that'll drive gold as well. All right, here are support and resistance levels. So you'll see we're really expecting to hit more of these greens where it comes down, and that's going to coincide with an inverse climb in the gold price. Gold silver ratio, as I mentioned, over the course of the month, it's climbed from about 83 to about 88. And, now we sit and close the month right just below 87. And so, unfortunately, there's not a ratio trade to make. We get teased with it looking like the pendulum's going to swing outside of the parameters, but it hasn't yet, and we're still stuck in the mid 80s here. Nothing to move out of gold into silver or out of silver into gold. So hang on in that regard. The last thing I want to point out is 2 other market sectors. We're hitting all-time highs in the equities. I've had a lot of people ask, should I sell my gold? If I sell my gold, what should I invest in? I don't know. This is still the everything bubble, and the everything bubble is still rallying, and equities hitting all-time highs. Again, some of that on expectations of an economic revival under President Trump, and we'll see what happens. But I'm very skeptical about the equities markets at an all-time high with the S&P. And same thing with cryptocurrencies. They do not act like gold. They have been moving differently. And this is another case in point here, just in this recent little cycle where Bitcoin has rallied substantially, even touching 100,000 per Bitcoin, as you see gold dropping, 3 to 4% in that period of time, really more, again, like the 9%. So that's kind of it in a nutshell from a chart standpoint. I appreciate, as always, you tuning in and listening to this. But don't ever hesitate to call, because it's really important to go through your individual portfolio and kind of get you an update on where you stand, and also talk about, should I sell, should I hold, should I add to ounces? If I add to ounces, should I be adding platinum, palladium, silver, or gold? And those are not any, sort of summaries that I can put on these videos, because each portfolio and purpose is unique. So as always, pleasure working with you. Eric and Deanna extend their warm wishes. Hope your Thanksgiving was wonderful and that you have a very blessed Christmas. And please call us at 866-211-8972 or email me at Tory@McIlvaney. That's TORY @McIlvaney.com. Take care. Merry Christmas.